Good evening, folks. This is Deeksha Janiani, and I'm representing Team Trendline. And this week, we bring to you a very interesting stock, which is Jubilant Foodworks. It's been buzzing in trade. So let's see what's cooking in this dish. So, as you must be aware that visionary CEO of the company, Mr. Pratik Pota, resigned on March 14, 2022, and that actually led to a very adverse stock reaction, and it actually crashed like 13% in a day. Isn't it unbelievable? Yes, it is. So, actually. Before we understand why there was such a negative reaction in the market, let's understand what were the key initiatives of the CEO and how he led the turnaround of the company between FY18 and FY20 and FY22. So let's tune in. So, folks, as you can see, the margins of the company had fell to an all-time low of 9.9% in FY17 just before Mr. Pota came to the helm of affairs. And that is because the company was on an aggressive store expansion plan. Basically, to put it simply, that they were expanding stores, but their per store sales was only 1%. So they were not really making money on the existing stores that they had, and that also, and their expenses also shot up, so that also led to their margins being compressed and earnings growth being compressed. So what Mr. Pratik did was that he focused on enhancing value from each store that already existed and put a pause button on the expansions of the company. And hence you can see that the margins climbed to an all-time high of 26% in his tenure. So we will also see how the top line and bottom line behaved in this in his tenure, for that matter. See, as you can see that the though the revenue growth was only 9% in Pota's tenure, the profit growth was 49% because he simply focused on enhancing, on getting more value out of each store and focused on expanding his margins. And because earnings growth was 49%, the stock price growth was also not behind. It was, it gave investors, stock gave investors 45% returns between FY17 and FY22, and that's quite formidable considering that Nifty 50 generally gives you 13 to 15% returns. So it's important that you achieve that earnings growth. So top line growth without commensurate bottom line growth doesn't add to the stock value. That's the point to be noted, folks. So, guys, let's find out what were the other initiatives of the CEO. So, you all must have heard the concept of buy one get one free on Wednesdays for Domino's before 2017, and that skewed the audience towards going to the Domino's outlet on a Wednesday because he was getting that discount and not on the other days. But Pota introduced the concept of everyday value. Is basically that you will get a discount of say 20 to 40% on most days of the week and not just one day of the week. So he actually enhanced the footfalls on say 4 or 5 days a week instead of just a day. So that enhanced the sales of the stores as well. Other thing was that he focused on enhancing the user experience of his app. And it's a fun fact that the Domino's app has seen more than 70 million downloads till date, and that strength of that app is one of the reasons that it's able to take on the competition, that is basically the food aggregators like Swiggy and Zomato, and still retain its sales in COVID times. So that app has been instrumental in that also. Other than that, he introduced many new brands, homegrown brands for that matter, and we'll just take a look at those. So, firstly, he identified the opportunity in Chinese because there was no formidable player on a national level if you talk about Chinese cuisine. So, he introduced Hong's Kitchen in somewhere around March 2019. And then he also took a franchisee for Popeyes, which is a very famous American fried chicken brand. And in fact, the company has already opened 2 stores in Bangalore in January 2022. And please let me know if you have tried it. Even I want to taste. So one of the initiatives was this, and in fact, the company has also received very good response from these stores, is something they have said in their press releases. Other thing is that biryani is much loved by everyone in India, so they also wanted to take on the opportunity that is present in their space, and it's estimated that the organized space is worth somewhere around was worth somewhere around 3,000 crores in India back in December 2020. So that is also this is also one of the homegrown initiative of the CEO. And So one more thing that it's to be noted here, that Dunkin' Donuts is one such franchisee that Jubilant Foodworks had taken, which was not exactly performing well. And Mr. Pota also, closed almost 100 non-performing stores of this brand. He also, one of the other things is that he introduced a delivery fee. So if you order a Domino's pizza on the app, you end up paying 30 rupees for delivery. So that's how, also one of the key reasons why the margins expanded during that time. So these are key initiatives of the CEO. Now one of the, so the stock has been in, has been weak even before the resignation was announced. So let's see what was happening with the QSR space back in Q2 FY22. So, firstly, when we entered the quarter, many brokerages, say, I will like to quote Motilal Oswal here, were excited about the space because this space was quite resilient in the times of COVID. And the brokerage estimated over 20% year, CAGR for this sector between 2020 and 2025. So that actually, so everybody got interested in the sector. And one of the other reasons is the resilience of this sector. As you can see on the screen, say if I talk about Jubilant Foodworks, the company derived more than around 65% of its sales from delivery channels even before the pandemic struck. So this business, in the scheme of the entire food service industry, was very resilient because they could achieve those sales through delivery and the reliance was less on dine-ins. So that's one of the reasons why this industry was something everybody had a keen interest in. And they, another factor is that they had massive expansion plans for next 3 to 4 years as well. So I think it's time to open up. That's the key mantra among QSRs. So if you see that for Jubilant, it wanted to it had a plan to increase its store count by over 25% to more than 1900 by FY24, and that included not just Domino's but Hong's Kitchen, Popeyes, Ekdom. So it had a journey to transform into a multi QSR chain for that matter. And the key issue which the market is seeing is that who will the new CEO be able to execute all these expansion plans? That is the key question in everyone's mind. So one of the other things, let's moving on to Q3 FY22. One of the other things which disappointed investors was that the company continued the practice of disclosing same store sales growth, and instead it said that it will only disclose like for like growth for non-split stores going forward. So lack of disclosures is never a good news for any company on the street. And in fact, if you look at the estimated same store sales growth by Motilal Oswal, it slowed down to 6% from 26% in the previous quarter. So that has also not gone down well with the investors in this company. Other thing is, even if you look at the like for like growth that the company reported, even that has fallen down to 7.5%. Analysts like Prabhudas Leeladhar say that, and Kotak Securities also say that the delivery volumes themselves are moderated. Basically, to put it simply, people are wanting to go out to have a meal. They're wanting to dine in rather than order food online. So the delivery channel itself is seeing a moderation in last quarter. So that is one of the reasons. So all this slow growth and this lack of disclosure basically caused weakness in the stock ever since February 2nd, 2022. And the resignation of Mr. Pota was the last straw in this story, and which led to an overall fall of 36% from its high point, which was achieved in January 2022. Let's also take a look at the trend for the last 5 quarters. And the important point to note here is, if you command high valuations, which Jubilant and in fact other QSR companies also do, then a growth of just 8 to 10% won't suffice. It leads to earnings downgrade, and then your price also falls. So when you command, say, a valuation of 56 times FY23 earnings, then your growth is should be somewhere around 20 to 30%. That's the general expectation also. So as you can see, the poor performance, the resignation, and the uncertainty created over the future has caused many earnings downgrade for the stock, and there is a very little upside left. But what should you do in such an environment? Folks, let me tell you, that this company is the most profitable QSR chain in India. And in fact, the store count has grown from 411 to 1500 in 2022. So it's not going to go anywhere. But yes, before you panic or before you put any fresh investments, it will be interesting to see who takes on the reins from here on, and whether he can achieve those expansion plans and the vision that was laid down by Mr. Pota. So, folks, I think let's wait and watch. And this is my time. Thank you so much for your time. And I'll see you in the next video.